Hi folks, Lee Gettess here with the Market Sense for the week of March 7th, 2017. As always, the charts we show in this presentation are provided to us by Gettess and their Trade Navigator software. Looking at a weekly bond market chart here, you can see since the breakdown and then the low, they've just been marking time sideways. The word is the Fed will be raising rates again soon. They seem not terribly bothered by that, but they're also not rallying back against them. So, yeah, I really thought the support down here in the this let's make this an area from 148.24 to 148. Let's just call it right in there. That's right along the lows of this congestion area here, and I really thought that might hold, and I still do. It hasn't broken yet. They're just not doing much of anything with them. We've got targets at 150.10 and 151.21 without even busting out of the sideways range that they could get to. And of course, if they break down, well, we've got the old lows below 146, and they could get ugly. But right now they have not broken support, and I think until they do, you have to assume this will hold. But this length of sideways, a breakdown's not out of the question for sure. And even on the momentum indicator down here, we've got what could be a turn here as it starts to break through. Now, if this week could close up here, this would just turn back up and it'll look like a kiss away. But right now, it looks like the momentum might be turning, even though it's been kind of up for the whole year so far. It may not make sense, sideways pattern, but the momentum tells me, well, it's kind of up. Anyway, that could change, and that's what we've been looking for, but I think you got to give support a chance until it breaks. In stocks, we have, well, a much different situation. There's nothing sideways about this, but we were kind of looking for them to go above 2400 again this week and possibly hold in the 2373 area here as support. They seem to be having trouble doing that. They're not exactly blowing through it, but they're not holding it very well either. That suggests that they might go below 2360 here to the middle moving average, and that's just below like 2359. But I'll tell you what, if they break 58, if they break it by more than a point or so, I think this support here below 2340 at the lower moving average, that might not hold either. They've got a lot of room down here to the mid-Keltner channel, and even the highs that they broke out from back here earlier in the year, they're down to 2300 and lower. So, if they don't hold right in here someplace, we could see a much more significant retracement, which, I mean, come on, look at the move up. You can't complain if they break back down here to the 2250 area even. But this type of momentum, this strength in the trend, they should have held the upper moving average here if they were going to continue that, and that doesn't look like that's going to be the case. Of course, we've got the monthly employment report the last day of the week, and once that's said and done, who knows where they might be. So that's what we've got for you today. I hope you can find something profitable to get